Good morning, traders. Welcome to the Wednesday morning market review. So, starting with the US dollar index, the index rebounded to around 98.6 on Tuesday, extending gains as the US government shutdown entered its seventh day. Lawmakers in the Senate remain deadlocked, with Democrats and Republicans unable to agree on the funding. Chuck Schumer also dismissed President Trump's claims of ongoing talks with Democrats. And recent data continues to reinforce expectations of a Fed rate cut, with markets nearly fully pricing in a quarter point cut this month and another in December. And traders now await comments from Fed Governor Stephen Millen on Wednesday and Chair Jerome Powell on Thursday. The dollar also gained support from weakness in the euro and yen after France's government resigned and Japan's ruling party elected a dovish leader. And technically, the dollar broke above Monday's high of 98.5 and upper Bollinger Band at 98.52. Holding above that could open the door to 98.71 and 99. But failure to hold would reinforce resistance near those levels. And now support sits at 98, 97.46, and deeper at 97.21. Moving to WTI crude oil. The oil traded around $61.6 per barrel early Tuesday. Prices began the week firmer after smaller than expected OPEC production increase eased the supply worries. And over the past two sessions, oil has rebounded about 1.5% and showing renewed buying interest. OPEC comments last weekend suggested a supply glut is unlikely in the coming months, supporting a short-term stability. And meanwhile, the CBOE volatility index has climbed towards 40, signaling a greater uncertainty and potential price swings. And technically, crude found firm support near 60.22, which is the lowest since October. The RSI remains below 50, reflecting cautious sentiment, though its upward slope hints at stabilizing momentum. The key supports are 61.17 and 60.22, and the resistance lies at 62.8 and 63.41. A close above those levels could confirm a stronger bullish setup. Turning to gold, spot gold continued its rally on Tuesday, trading near $39.80 an ounce. The metal hit two new record highs this week, reaching $39.91, supported by the Fed cut expectations and the global political uncertainty. The instability in France, higher Japanese yields, and the ongoing US shutdown all boost the safe haven demand. And supported by the central bank buying and a weaker dollar, gold is already up about 50% this year, breaking the 3,000 in March, 3,800 in late September, and now near $4,000. With the rate cuts expectations to fall and the volatility high, the gold remains a key hedge. And technically, the price tracked the upper Bollinger Band near 39.72 with widening volatility. The 3900 and 3864 levels have become the support now. A break above 3991 would mark a new all-time high with resistance at 4000 and 4050. And last but not least, the Australian dollar. The Aussie dollar eased slightly on Tuesday, giving back a part of Monday's gain. The weak Westpac confidence and ANZ as job ads pressured the pair, while the dollar held firm despite the shutdown uncertainty. The RBA kept rates at 3.6% and warned inflation remains sticky, especially in the service. And traders will watch upcoming RBA speeches for the policy clues. And technically, Australian dollar remains in an uptrend with RSI above 50 supporting a mild bullish bias. And resistance stands at 66.60 and 6700, while support lies at 65.76 and 65.20. So that wraps up today's morning review. Watch for the Fed remarks, OPEC headlines, and also ongoing political developments. These are all the key market drivers this week. So trade safe, and I will see you in the next update.